Hello and welcome. This is the Market Wrap. I'm Agam Akil. It's turned out to be a very disappointing start to this trading week, considering we've seen a deeper gash. And now, today, we've seen the Nifty end at a level, lowest since the 22nd of August, because 22nd of August, that is just a few weeks ago, we actually had the Nifty close at lower levels. We haven't breached that yet, but that said, we've lost around 220 points today, closing in below the mark of 10,800. From the futures and options perspective, an important one, but I'll come to that in just a bit. As far as the Nifty 50 is concerned, we just had two gainers, Tech Mahindra and HCL Technologies, but except for that, we've seen losses throughout. Tata Steel, Ultratech Cement, ICICI Bank, Indian Oil and Titan leading the losses, all losing over 4%. On the losing end, when it comes to the broader markets too, we've had one gainer for four losers, with perhaps some names like IDBI Bank and Reliance Power along with Indoco Remedy advancing, but a tremendous amount of weakness for some of these names, PSU banking names, which were mentioned and will be merged. Of course, Indian Bank, Canara Bank, Union Bank, Punjab National Bank, Oriental Bank of Commerce, Minda Corp, Reliance Infra, RB Infra, all of them losing out quite substantially in trade. A surprise name here is ICICI Lombard, which had some sort of momentum of late, but it gave up a lot of its gains today. On that note, I'm going to get in our market editor, Neeraj Shah, for his view on the markets. Neeraj, what do you think has been causing this weakness?
Well, the frequent high frequency indicators or everything that has come out has been bad, right? We were talking about this yesterday, that post Wednesday, bulls were likely to run out of steam and hit a bit of a speed breaker. GDP print was expected to be bad, far worse. Auto sales numbers very poor for the month of August and September. From the looks of it, from the commentary, it doesn't seem like improving in a hurry. So that's the other roadblock that the bulls have. And if earnings are going to be a question mark, then I think we are very well within, almost everybody well within the rights to try and question these valuations, one in the first place. Two, I mean, the whole control or conversation around fiscal deficit as a percentage of GDP looking okay because of the RBI transfers. Now, if the GDP estimates are coming lower, tax collections are lower, GST collections were sub 1 lakh crores yet again, you've got to ask yourself the question about how bad is the macro looking, and is it possible to time it a turnaround? And if not, maybe FIs have alternate avenues to invest in, and they would be going there. So while we have this DI flow coming in, this market tells you a story that FIs have sold. Reliance cracking 4% is not because of one AMC selling out. It has to be some FI money that is got sold out. So I think you've got to take a hard look at figuring out when to time the market. I think just as we sum up, Agam, just one thing that stood out from that Kenneth Andrade note that he put out for his investors, saying that all traditional models of investing are failing right now. People are not quite able to get a hang of why is it that a good valued stock is not going up. And therefore, maybe bets would be off right now.
Yeah, absolutely. Well, some concerns there. Neeraj, thanks for that perspective. So, there is no doubt about the fact that there is evident weakness in the markets, explained by the fall in the heavyweights too. But on that note, let's start by focusing about a handful of stocks and sectors out there, which have also been seeing a lot of movement today. IDBI Bank in the positive is one of them, and I'm going to get in Shefali Malik to talk to us about that. Shefali, some updates in the last hour of trade here.
There's more money being put into the bank. So basically, the government announced that they are going to put in about 4,500 crores, and LIC is going to put in more money, about 4,700 crores. Now, this comes on top of more than 20,000 crores worth stake that they had bought last year, and they had acquired about 51% controlling stake in the bank. Now, more money. That's because still the bank is really weak. You can look at their metrics. Their capital adequacy ratio is just about 8.14%, the total. The CET1, that is Common Equity Tier 1, plus the capital conservation buffer, that is about 5.9% at June 1, and their NPAs are a whopping 29%. And net NPA is 8%. Provisioning coverage ratio is high, about 88%, but looking at the high amount of gross NPAs, obviously they would be needing more money. They're breaching couple of those PCA mechanism thresholds. So it's in a very weak state. So today the bank, the stock price went up by about 7%, but overall it's a very sad state of affairs that so much money needs to be put in to strengthen the bank. LIC had acquired the stake at about 61 rupees per share.
Right.
Since then it's already half.
Well, half, yeah.
Yeah, so they've lost money.
All right.
So that's IDBI.
Okay, fair enough, Shefali. Thanks for getting us those updates there. So, well, some sort of boost being provided to our IDBI Bank. It's a wait and watch on this one, and whether or not and how it reacts and takes in these funds and the usage of that. But on that note, let's also talk about some updates with respect to ethanol, because that was the other update coming in from the press conference held by a few government officials today. And I'm going to get in Yash Upadhyay to talk to us about updates here. Yash?
All right, so Agam, so this was something that was likely to be announced in a few days, and the government has increased the procurement price for ethanol for the next sugar season. Now, marginal increases when it comes to the two particular types of means by which they can produce ethanol, and that is from cane juice and C heavy molasses, when the quantum of increase has only been about 29 paise over the previous price. So the cane juice price now stands increased from 59.19 to 59.5 rupees. Whereas for C heavy molasses it goes up from 43.5 to 43.75. But the big increase that has come in has been for the B heavy molasses. Now this is where the content of sucrose is the lowest, which is why the sugar millers have to forego some amount of sugar production, which is not there in the case of C heavy molasses. Is why the procurement price is lower over there, because the sugar company can also produce more sugar in that case, and the quantum of increase has been as high as 1.84 rupees over the previous price. So it's increased from 52.43 to 54.27 rupees when it comes to the case of B heavy molasses. Now these are all measures which come in place following last week. There was another announcement where the government had announced the export subsidy as well, mandating it for the sugar companies to export a minimum of 6 million tons in the upcoming sugar season, as well as the creation of a buffer stock of 4 million tons. And these are all measures that are needed for the hour, because the sugar industry is looking at a huge supply glut this time around. Although for the next year the expectation is that there would be a global deficit, but currently overall the sugar prices are depressed. They are managing to be above the MSP price right now, but overall the industry is working with huge cane arrears as well, and the sugar industry has been looking at the ethanol side of things in order to improve their profitability because of the cyclical nature of sugar prices. So this should be another positive, but the quantum of increases haven't been that great. We'll have to speak with a few sugar companies to try and understand. They are also awaiting finer details, but these are all prices excluding GST and transportation. The demand has been very good from the OMCs. It's only now up to the sugar companies to revert back with the kind of supply.
Right. Okay, fair enough, Yash. Thanks for getting us those updates. So, there are some updates awaited as far as pricing is concerned, especially from the sugar suppliers. But finally, let's talk about MCX, because that was also in focus. I'm going to get in Sharad Dubey to talk to us about that. Sharad, the stock's under pressure.
Yes, definitely, Agam. The stock almost fell almost 13% today, based on the news that there was an alleged whistleblower complaints going around the social media. Now, if you see the stock performances, the stock was hitting continuously the 52-week high, in the month of August, and then suddenly we see, the stock falling, from the prices of almost 960 plus to ending the day at around 880 per share. This was the biggest intraday fall seen in almost 10 months. Now, you see why MCX was down is this complaint highlights actually stated that there was a kind of a malpractices in the cotton trades, from November 18 to June 19, and also the complaints also alleged that there was a siphoning of money and also a rampant support to the algo trades. So apart from this, the management actually spoke to Bloomberg Quint today in the day's trade, and they stated that these whistleblower complaints are not coming from the employees, but it's an anonymous, and also they will be dealing with this, and also will sending a response to SEBI. Apart from this, the management also stated that there is no delay or default for the cotton contracts, and there is no increase in the contract amount for purchasing the platform system, which was stated at around 20 odd crore rupees. So a lot of corporate governance issues coming up, for MCX. So that is something, this space which we'll be watching out for. going ahead, Agam.
All right, Sharad, thanks for getting us those updates. So, well, another stock where we do need to wait for more developments, but for now, we do know that MCX has fallen. And of course, with the management making those clarifications, you never know. So wait and watch on that one as well. Well, a weak day of trade, well, a lot of selling coming through and on heavy volumes too. So we are going to have to keep an eye on whether or not there will be a recovery eventually. But on that note, it's a wrap on the markets. But lots more lined up. Stay tuned to Bloomberg.